Hi everyone, this is Venkat. Today we are going to discuss about fixed asset module. I will tell you what is fixed asset definition. Fixed assets refer to long-term tangible assets that are used in the operations of a business. They provide long-term financial benefits, have a useful life of more than 1 year, and are classified as property, plant, and equipment. In short, we call as PPE on the balance sheet. These fixed assets are shown in the balance sheet. Okay, in the assets side. Okay, in assets we have current assets and fixed assets. Here you can see here on the left hand side we have fixed assets. Example showing lands and buildings and its value, equipment. Okay, then it is showing the less depreciation. Okay, so it is showing a net fixed assets value. Okay, this I will explain in the next content. Okay, now I will tell you about the fixed assets procurement part first before explaining about fixed assets. In every company there is a procurement procedure for fixed assets. The user department will raise an intent to procure the fixed assets. Now that intent is passed to the purchase department. Now purchase department has its own process to procure the fixed assets. They will go for the request for quotes. Okay, then they will get the quotations from suppliers. Okay, they after getting quotations from suppliers, they do the comparative analysis of the quotations, and they will finalize the suppliers and they will give a PO to the supplier. Okay, once that PO is approved, it is sent to the vendor by email or a soft copy. Now vendor will send the fixed asset to the end user. Okay, now end user will receive that fixed asset through a asset goods receipt note. Okay, these goods receipt note will be generated by the stores person. Okay, here some companies will update the stocks. Okay, and some companies will not update the stocks. Okay, once it is received, the information is passed to the finance department. Okay, now finance department will record the financial entries through the asset purchase voucher. Okay, before recording the purchase voucher, they will see whether this asset has to capitalize or not. Okay, if this asset has to be capitalized, okay, what they do is they will debit the asset WIP account. Okay, debit the taxes and they will credit the supplier. Okay, if this asset has to be directly recorded, so they will not record in WIP. Directly they will debit the asset account and credit the supplier account. Okay, this is how the procurement process of fixed asset is done. Here are some of the examples of fixed assets which can be easily converted into the cash. Okay, land, buildings, factories, furniture, and equipments. Okay, these are the fixed assets which can be sold and convert into the cash. Okay, I'm just showing what are the current assets also, just to have a clarity about fixed assets and current assets. Okay, current assets are listed on the balance sheet that shows the value of the assets owned by the company, and that can be converted to cash through liquidation. Okay, use, okay, or sales within 1 year of time. Okay, within 1 year of time these assets can be sold. Like you have a cash or cash equivalent things with you, or which can be sold and converted into cash. You have you might have done some sales. Okay, which we call it as account receivables. Okay, if you have to receive any amount from the market, these account receivables also can be converted into the cash. Okay, also if you have paid any prepaid expenses, okay, even that prepaid expenses also can be converted into cash. Okay, if you have any raw materials or any inventory existing in your company, even this can be sold within a year and can be converted into the cash. Okay, in case if you have invested anything outside the company, short-term investments, even this can be sold within a period and converted into the cash. Okay, now what are fixed asset types? Okay, there are two types in the fixed assets, okay, which are classified into tangible and intangible assets. Now, what is tangible assets? Tangible asset is an asset that has a physical existence. Okay, tangible assets examples are land, building, and machinery, or any vehicles. Okay, that can be physically seen. Or these are treated as tangible assets. And what is intangible assets? Okay, intangible assets which doesn't possess a physical existence, like brand recognition, intellectual property, goodwill, and such as copyrights, trademarks, okay, patents. Okay, these are all the example of the intangible assets. Okay, in assets also we can group as tangible and intangible assets, because as you have invested for both of the things, you have to segregate tangible assets and intangible assets in the balance sheet. Okay, now how to account the fixed asset after procuring? First of all, we need to record the transaction. When you record the transaction, you have to debit the fixed asset account or WIP account. Okay, if you have to capitalize, you have to debit the WIP account. Okay, or if you don't want to capitalize, you can directly debit the fixed asset account and credit the supplier. Okay, once the fixed asset recording is done in the respective books, from the day one the depreciation will start. Okay, so there are several methods to determine the depreciation. Okay, most commonly used method is straight line method and WDV method. Okay, straight line method is directly calculated as a flat method. Okay, WDV method is calculated based on the diminishing value. Okay, so once the asset based upon its useful life will function in the organization, after that period it must be scrapped or sold. Okay, when we use this asset for a period, either this has to be sold or scrapped. If it is in a working condition, we can sell that asset. If it is non-working condition, we have to scrap that asset. Okay, so that is performed by debiting the accumulated depreciation account of all the depreciation charges and crediting the respective fixed asset. Let me explain you about the depreciation fixed assets. In depreciation, you will have a depreciation account and accumulated depreciation account. So you have to create two accounts when you create the asset account. Totally, it's three accounts. You have to create the asset account, depreciation account, and the accumulated depreciation account. So why we are creating these three accounts? In the accounting norms, whenever we depreciate any asset, you should not change the original value. Okay, to change the original value, we maintain this accumulated depreciation account, which is our assets and liabilities account. Okay, the depreciation is an expense account. Okay, which comes in the P&L. The depreciation account what we create, which comes in the P&L account. The accumulated depreciation account, which comes in the liability side. Okay, and the asset account will come in the debit side. Okay, in the balance sheet. So let me explain about the depreciation in fixed assets. The monetary value of an asset decreases over time due to its use, wear and tear, or obsolescence. Okay, obsolescence. This decrease is measured as depreciation. Okay, whenever you use any asset over a time, okay, if that asset is in a working condition or which is in a non-working condition, the value has to be decreased as per the depreciation we define in the asset master. Okay, this depreciation decrease in an asset value may be caused by number of other factors as such as unfavorable market conditions also. Sometimes what happens, based on the market conditions, the depreciation value will come down. So in that case also we need to depreciate the asset value. Okay, there are different ways to calculate depreciation. As I said, there is one method which is a straight line method. The other method is WDB, declining balance method. Okay, now let me tell you about the accumulated depreciation. Okay, accumulated depreciation is the total amount an asset has been depreciated up until a single point. Each period, the depreciation expense recorded in that period is added to the beginning accumulated depreciation balance. Okay, so how this depreciation and accumulated depreciation is done? I'll just tell you about the fixed asset formula when you calculate the depreciation. Okay, net fixed assets. Okay, you have a asset value, total fixed asset value. Okay, from that what we do is we will minus the accumulated depreciation value. Say your asset value is 100,000, your accumulated depreciation value is 70,000. So your net fixed asset value will become 30,000. This is how your fixed asset formula will be defined. Okay, I'll just give you one example. When you do any sale of an asset, how the process will run. Okay, here when we buy the machine, we will use the machine in our premises. Okay, every year till the year we use, we calculate the depreciation. Okay, if that machine is in working condition, okay, if we want to buy a new machine, we have to sell this machine. Okay, if anyone is ready to buy that machine, we can sell this machine. Okay, so what we do is after selling this machine, we will see the buyer how much he paid for that machine. Okay, based on the amount we received, what we do is we put the accumulated value plus what is the sale of asset value. Okay, accumulated value plus sale of asset value. We will sum this value and we will see what is the value we arrived. In case if any loss arrived, in case any loss arrived, what we do is the entry what we make is we'll debit the cash of the amount received, debit all the accumulated depreciation, debit the loss on sale of asset account and credit the fixed asset account. Now in case if we receive a profit, okay, what we do is we debit the cash for the amount received. Okay, we debit all the accumulated depreciation. Okay, we credit the fixed asset account. Okay, in loss what we did, we debit the loss on sale of asset account. Here we will credit, that means we are reversing that account. Okay, I will just show you one example when you do a asset disposal, how it will be shown as a JV. In this example, I am showing an ABC International buys a machine for INR 50k and recognizes INR 5k of depreciation per year over the following 10 years. Okay, at that time the machine is fully depreciated. ABC give its away and records the following entry. Okay, after 10 years my accumulated depreciation has become 50,000. Every year I am passing as a 5,000 as my depreciation value. So the value of the machine originally is 50,000, even my accumulated is 50,000. Okay, if this machine, if it is in a working condition, I can sell it. Okay, if this is not in a working condition, I can scrap it. Okay, one more example I am giving. The same ABC International sells a machine, okay, 100,000 machine for 35k, okay, in cash. Originally the machine value is 100,000, but when they sell this machine, they sold it for 35k, okay. At the time of selling this machine, the machine accumulated value was 70k, okay. If I want to do a JV for this sale of asset, okay, so what I do here, I'll debit the cash for amount what I have sold, okay. Now I will debit my accumulated depreciation. So if I sum this, my value will be 105k, 105,000, okay. Original my value was, when I purchased, it was only 100,000. So here I have gained some money, around 5k I have gained. So what I do, I will credit the 5k as a gain on asset disposal account. This is how the JV, it will be passed at the time of sale of asset when you get a gain, okay. Here I am showing one example for the loss, okay. ABC sells another machine. Original cost is 40k, okay, but the sale value is 25k, okay. The compiled accumulated depreciation value is 10k. Now you see here, my sold value is 25k, accumulated value is 10k, okay. My original value is 40, okay. 20 plus 10, it is 35. So what was my original value when I sold? 40k. If I minus this, 40 minus 35, so I am in a loss side. So I will book a loss in my P&L. So this is how the profit and loss will be recorded. Okay, here the theoretical part is finished. Now I will show you how to work on these examples in Focus 9 ERP. I will show you complete the procurement module, okay, right from asset indent to asset purchase voucher, okay. After that, I will show you how the entries will affect in Focus-ERP, and also I will show you the asset register, okay. In that asset register, it will list all the depreciation entries. Also, I will show you the sale of asset also. Let me take over through the fixed asset procurement module. Okay, log in into Focus with your credentials. Once you are logged in, make sure that there are some configuration settings for fixed assets. You need to go to settings, then click on configure transactions. Under configure transactions, you have fixed assets component here. Click on this fixed asset component. Now you see you have a location tag. You can set your location, okay, in case if you want to transfer your fixed asset from one location to another location, this tag is must to configure, okay. Then here we have one more checkbox, creation of fixed asset is mandatory from purchase, okay. When you do any purchases, there when you save the voucher, the system will ask you to create the fixed asset, okay, or you can create in the other way also, but I have checked this mark to create it, okay. And always define depreciation rate as percentage, okay. Whenever you give the rate, you have to give it as a percentage, okay. There is one more checkbox here, include assets in purchase account, okay. So it should not select any other account. There in the purchase account, it should be only the asset account, okay. Here there is a post depreciation options are there, which you need to tick. You have default option, okay. You have post by month. Default means it doesn't post anything. If you click on post depreciation by month, when you run the depreciation entries to post, it will post as monthly, okay. And there is a fixed monthly depreciation also. It will not calculate. What it does, it takes the amount what you have defined and it posts the same amount, okay. And there is one more posting for yearly depreciation also, okay. you can click on yearly depreciation if you don't want to do it monthly. Okay, and there is a consolidated posting. Consolidated posting means every fixed assets will have one posting actually. Okay, if you want to consolidate those postings, similar fixed assets, you can do the consolidated postings. Okay, now you have one more option, post entry during stock transfer. In case if you want to do any financial entries to be changed at the time of transfer, yes, you can change the posting account. Okay, even you have an option post entry during disposal. Whenever you do any sale of asset, you can do the disposal entry also. Okay, and what account the depreciation to be posted, here also we have an option. You can set this option. In case if you want to add any asset value that has to be posted to some other account, yes, you can add those account also. The same option you have for reduce asset value also. Okay, like this you have all these preferences. Okay, first you need to set these preferences. Okay, in fixed assets, if it is a new company, just started company, you can directly procure the fixed assets. Or if it is an old company and you are using the software first time, then you can create the fixed assets in the fixed assets master. Okay, I will just show you the procurement module first. Okay, after this I will show you if it is a old asset, how to take it into fixed assets without using purchase vouchers. Okay, to do that, okay, you need to go to the indent. Okay, let me erase some transactions here to show you. Okay, before that I want to show you the workflow what I have defined for the fixed asset. Okay, this is the defined workflow. Okay, fixed assets. Okay, here I have 4 vouchers. One is indent, which will be raised by the user. Okay, and after indent the asset PO is there, which will be raised by the purchase department. There is an asset GRN which is received by the stores person. Okay, again we have one more voucher called asset purchase voucher, which is purely to book the fixed asset financial entries. Okay, totally we have 4 vouchers, indent versus PO, PO versus GRN, and GRN versus purchase voucher. Okay, like this the flow of fixed asset to be configured first. Okay, this is the purchase of fixed assets. Okay, the user department will raise the indent first, asset indent. Okay, I click on new. Okay, I'll just go and give my date. This is my starting date, system date. Okay, and I'll give from which cost center I am requesting this item. Okay, here I have an item. You can search for an item. Okay, I want to buy a photocopier machine. Okay, like this I can select it. In case if you have any new item, you just double click here. Okay, if you have rights, then you can create the item name here. You can request the item whatever you want. You can create the item with all the respective mandatory fields. Okay, so I am selecting the existing product here. I need a photocopier machine, one quantity. Okay, one quantity. Then I will save this particular indent. You can send for authorization. In the upcoming sessions I will tell about the authorizations also. Once this asset is authorized, this indent, asset indent is authorized by the respective manager, then it is passed to the purchase department. Now purchase department job is to procure this asset as per the asset indent request. Okay, now what purchase department will do is they have their own process of procuring this. They do a request for quotations to the suppliers. Okay, now suppliers will send the quotations to the purchase department. Okay, they will send this request to 4 to 5 suppliers, then they will get the price, okay, the preferred suppliers from the preferred suppliers. After getting the price, they do the quotation analysis. Okay, after doing the quotation analysis based on the terms and conditions, they will order this fixed asset to the respective supplier. Okay, now once the indent is raised, all the quotation analysis is done. Now the purchase department will raise the purchase order. Okay, so I have asset PO. I just type asset PO here. I click here. Now I click on a pending indents. When I click on a pending indents, whatever the pending indents are there, it will display here. I will select the respective indent. I will click on convert. When I click on convert, all the contents from the asset indent will be copied here. Okay, you can see the cost center is copied, the date is copied, and you can see all my item description, everything is copied. Now what I'll do is I will select the vendor name here. Okay, if I have that vendor, I will select it from here, or I can also create the vendor name. I'm just selecting vendor C as my supplier. Okay, if I want to give any description, I can give the description. Okay, I will give my rate as 52,000 is my photocopier price. If at all anything, any taxes or anything, I can mention it here. Okay, I'll just save this. Once this is saved, okay, once this is saved, you can send this PO to the supplier by email or physically. Okay, we have options of sending email also. Okay, when the product readiness will happen, the supplier will send this asset to the end user. Okay, the end user will receive this fixed assets through a asset GRN. Now this receiving job is the stores department work. Okay, now stores person will receive this asset through a asset GRN. Okay, he will click on the pending POs, pending asset POs. He will see which asset has been received. Okay, he will select this and he will click on convert. Okay, when you click on convert, all the contents from the PO will be copied here. If you want to keep in any particular warehouse, you can also keep here. It's your option to update the stock, or you don't want to update the stock. Okay, once the asset GRN is done, okay, you can mention the bill number given by the customer. Okay, and the date, which date the customer, the supplier has raised the bill. You can give this. Okay, once the GRN is saved, now after this entry, the details will be sent to the accounts department. Okay, now accounts department will verify all the documents right from indent to the GRN. Okay, on the receipt of the GRN acknowledgement, now account department will pass the financial entries. Okay, here you have two options of passing the financial entries. The asset can be taken into the books directly, or the asset can be taken into work in progress. Now why the work in progress will come into the picture? Sometimes what happens, some assets need erection. Erections means some extra work. Okay, I purchased a big equipment. That equipment has to placed on a basement. Now I have to construct a basement. Now again, constructing a basement is a value to the company. Okay, so they will construct the basement. Okay, that cost, the basement cost, the additional cost, they will add to the fixed assets. Okay, maybe today I received the fixed assets. After 3 or 4 days, my basement will be ready. Okay, after a week, my fixed assets is ready to place on the basement. So almost it has taken 7 to 10 days to ready the basement as well as to place the fixed asset. Okay, now whenever the fixed asset is placed on the proper basement, the accounts department will consider that particular date as a fixed asset incoming date. Okay, so from that day onwards the depreciation will get calculated, and for that reason the capitalization of accounts, the capitalization of assets will be done by the accounts. Okay, now I am just taking my GRN into purchase voucher. I just type asset asset PO. Okay, I select this and I will click on convert. Sorry, I select my asset purchase voucher. Okay, then I click on my pending GRNs. Okay, then I click on convert. When I click on convert, all the contents from the GRN will be copied here. Okay, you can see the bill number is copied, the supplier name is copied, the cost center is copied, the bill date is copied. So all the details will be copied here. Even the requisition date, everything will be copied. Now here my job is to save this entry. When I try to save this entry, here I have two accounts, one is purchase account and one is vendor account. Now here in purchase account, you have to select the fixed asset account. So I have office equipment account. Let me check. Yeah, I have the office equipment account. I will select this. Okay, make sure that this account type, I'll just edit this account with Control E. After selecting the account, I'll just edit this account with Control E. Here I have the type of the account. I'll just show you. See, here I have the account type. Here I have many types. This account type should be fixed assets only. So without having this fixed asset type, you will not get the fixed asset menu while saving. Okay, so you have to give the account type as fixed assets, group as fixed assets. Okay, you can assign the code and then save it and close. Okay, now I'll try to save this. I'll click on pick amount, so it will take my fixed assets value. Then I press OK. Now you see I got another menu here from the fixed assets module. Okay, now what happens here is all the information what you have entered in purchase voucher, those information will be copied into this screen. Okay, now you can see here it will give you the purchase date, it will give you the fixed asset name, and here you have to select the asset type. Whatever the asset type you want to select, you can select the asset type. Again, you can even give the other details like location, which location you want to keep these fixed assets. Okay, here you have one more tab called depreciation. Here you need to give what method you want to use for this depreciation calculation. So here I am selecting straight line method. When you select the straight line method, it will ask you what is the rate of the depreciation. Okay, now I'll give 20%. Okay, I'm giving 20%, and date of commencement means in your books from which date the calculation should happen for depreciation. So I am selecting the same date of 12th September. Okay, so from 12th September the commencement will start, and from here onwards the depreciation will start calculating. Okay, after this you have one more tab called accounting links. Here you have to give the three accounts. This asset account code, it is already taken from the purchase voucher. Accumulated depreciation. Okay, accumulated depreciation. Okay, I have office equipment accumulated depreciation account. Here again I have office equipment depreciation account. So like this you can create different accounts for each asset, and you can map these accounts. For sale account, you can select whichever sales account you want. You can even change the sales account as sales fixed assets. Here you have to define a gain on asset sale account and a loss on
asset sale account. These three accounts are needed only when you do the fixed asset sales. Okay, so I'm just mapping and keeping it ready so that I will show you how this account will applicable when you do the sale of asset. Okay, once this is done, okay, you need to save this. Okay, now here, okay, I have directly accounted for office equipment account and vendor account. Now if I see the posting details here, okay, these are my posting details. Okay, my office equipment account is debited and my vendor C account is credited. Okay, now if you go and see in your balance sheet side, on the debit side, on the left hand side, you will see this office equipment account. Okay, this is one way of doing fixed asset posting. There is another way of doing fixed asset posting, like if you have an heavy equipment which cannot be taken in the books directly. Sometimes what happens is for that fixed assets, there are some erection works which need to be done. Okay, for example, I have purchased one equipment. Okay, to place that equipment, I need a basement wall. Okay, to construct that basement wall, I need so much of materials. So whatever materials will incur, the expenses of the materials, I will add into fixed assets, and then after that I will take it into the books. So if the fixed assets purchase is done on 12th of September, okay, maybe I will take this particular fixed assets on 15th of September. So within these 3 days my erection work will get finished. Before that, what happens is I will not debit to office equipment account. What I will do is I will open one account called office equipment work in progress account. Okay, in this place, in the purchase, I will select office equipment work in progress account. Okay, when I do the office equipment work in progress account, my asset will not get created in the fixed asset master. Okay, for that what I need to do is I need to capitalize. Okay, whenever my asset is ready, I have to capitalize. Okay, at the time of capitalization, I will pass a journal entry. Okay, from office equipment WIP account, which was debited at the time of posting, I will credit now, then I will debit the office equipment account. So this is how you have to pass one JV internally. Okay, after passing JV, you have to come to fixed assets master, then manually you have to create the this fixed asset name, photocopier machine, Siemens. Okay, there again you have to give all the details along with your erection charges. Okay, say you have purchased your fixed asset for 52,000. Okay, then you have spent around 8,000 for erection. So your fixed asset value will become 60,000. Okay, purchase value will be 52,000, erection value will be 8,000. So overall you have to give it as 60,000. Okay, in the JV what we do is work in progress, we will give it as 52,000. Okay, work in progress we will credit as 52,000. Okay, then what we do is 8,000 we will credit for erection expenses. Okay, now this 52 and 8,000 will become 60,000. Okay, overall this 60,000 we will debit to office equipment account. Okay, so whatever the erection charges I have credited, okay, that will be set off with the expenses account. Okay, whenever I do an expense, okay, in my P&L that goes in a debit side. Now I am adding this value to fixed asset, so I am crediting this expenses in the JV. Okay, so I will just show you how to do that in one method. Okay, what I will do is I will just open one office equipment WIP account. Okay, this will be my liability account. I can choose assets or liability account, or I can choose the asset account. Okay, now what I will do is I will save this. Okay, now here what happens, instead of before you see the posting details, before changing this I want to show you the posting details also. Okay, now it has become WIP account. Okay, WIP account. Now what happens, the fixed asset menu has not opened because I have selected a WIP account. Okay, in the before transaction the asset name is already created. Okay, asset name is already created in the fixed assets master. Just let me show you, this asset account is already created. Okay, this account is already created. What I will do is I will delete this account now. I will just delete this account. Okay, just to clarify how the work in progress account will be managed in fixed asset. Okay, now what I will do is I will just go to my balance sheet. I'll go to my balance sheet. Okay, I'll give as on date or what is my balance sheet. Okay, I'll just select the balance sheet and I'll press OK. Now let me show you here. Now you see I have my office equipment WIP account in debit side. Okay, so instead of fixed asset account, it has debited to office equipment account. Now I will do some erection. Okay, in erection what happens, I'll pay some money for erection. Let me give some expenses. I'll just select some expenses. Now I will go to the payment voucher. What I will do is I will make a payment, cash payment towards erection charges. Okay, erection expenses. I'll click on new. Okay, let me. Okay, from cash account, from this cost center, I am doing these expenses. What I did is I have selected the account as erection expenses. Then I am giving amount as 8,000. I will just save this. Okay, after saving this, if you see my profit and loss account, okay, now you see on the top there is an erection expenses account 8,000 which is debited. Okay, now we have to add these 8,000 into our fixed assets. We have to capitalize this. So what we have to do is till we capitalize this, we will show under our expenses only. Okay. Now what we do is we will pass one JV. We will go to the general entry. We'll click on new. Okay, now we will capitalize the asset by passing the entry. Okay, this is how you have to define the accounts. I have debited office equipment account and credited office equipment WIP account with 60,000. Okay, in the second line I have debited again 8,000 and credited erection expenses account. Okay, now I will save. Okay, after saving here you will get all the fixed asset master. Okay, here you have to give all the fixed asset details. Okay, here you can give the fixed asset code. Okay, after this you can give the asset type. Okay, that would be your office equipment account. Okay, here quantity, you can mention how much quantity you have. Okay, then you have a depreciation account here. Okay, here you have to select whatever method you would like to give. I am selecting straight line method. Okay, here the rate of depreciation I am mentioning as 20%. Okay, here date of commencement, like when you are capitalizing, the date of commencement would be your capitalization date. So I am just selecting as September 12th. Okay, after this you have the account links. Click on account links tab. Here you have to define 3 accounts. One is your asset account, which is your office equipment account. Then your accumulated account. office equipment accumulated account. Okay, then you have your depreciation account. Okay, office equipment depreciation account. These three accounts are must to define, and other three accounts you need only at the time of sales account. I am defining that also. Okay, just giving sales computer, or you can give it as sales fixed assets. Here you have to give your gain. If you have any gain on the sale of asset, give the gain account. Here you have to give the loss account. After this you need to save this. Okay, now we have saved the JV. Okay, I just go to previous. Okay, now I will show my balance sheet and P&L. Okay, this is my balance sheet. This is my balance sheet. Now you can see I don't see any WIP account. I can see my office equipment is debited with 60,000. Okay, this is how you have to capitalize the account. Okay, now I will show you the profit and loss account. Okay, in profit and loss account there was erection charges before. Now you see there is no erection charges. The erection charges have become nil. This is how you capitalize the asset. Once the asset is capitalized, now you will see that asset in the asset register. Okay, now I will show you the asset register. Close this and again close this. Go to fixed assets reports. Okay, now you have depreciation schedule report here. Click on this. Okay, it will ask you to give the date range, or you can select as on date. Then you have to select the reporting level, and you have to select by location report. Okay, when you click OK, now you see you will get a fixed asset register. Okay, now you see this particular asset has been purchased on so and so date, but it is capitalized on 11th of September. Okay, now the depreciation value is 20%. Now you see here the depreciation is calculated only for one day, which is 65.75. After depreciating this value, now it will show the closing value. Like this you will get the depreciation schedule. So far I have shown you how to see the report, depreciation schedule report, using purchase voucher and journal entry voucher. Now I will show you a report using the old fixed assets. If you have any assets which have been purchased last year, how to do that? Okay, for that what you need to do is you have to go to fixed asset transactions. Okay, in this sorry, not in the fixed asset transactions, you have to go to home, masters. Okay, go to fixed asset master. Go to fixed assets master. Here you click on new. Okay, say I have a motor vehicle. Okay, my location, I am setting my location as main location. My asset type would be vehicle. Okay, I will select as vehicle. Now at the time of purchasing my fixed asset, my motor vehicle was 900,000. Okay, 900,000. One quantity. I have purchased this fixed asset in last year 2021. Okay, on 1st of April. Okay, here I have to enter my cumulative depreciation as of the date when you are registering this fixed asset. Say I have 50,000 of my cumulative depreciation for my asset, old asset. Okay, here again I have to mention my cost center, which cost center it belongs to. Again I have to give my depreciation method. Okay, here also I am giving a straight line method. Okay, same 20% I am using. Okay, or 25% I am using. When I give this rate of depreciation percentage, automatically it will take how many years. So it will calculate according to the percentage, and it will take number of years it will depreciate. Now I will give the commencement date as April 1st again of 2021. Okay, I'll give the year as 2021 of April 1st. Okay, then I give my accounting links. Okay, I'll give my accounting links here. I have motor car, okay, asset account. I have my motor car accumulated depreciation account. I have my motor car depreciation account. Okay, again I can choose my sale account here, gain account here, and loss account here. Once I give this, I go to the general tab. I'll see all my details are mentioned or not. Okay, once this is done, okay, I can mention my scrap value as 1. Okay, I'll save this. Okay, after saving this, I'll go to my depreciation schedule report. Okay, when I go to my depreciation schedule report, now you see I have got all the figures of my old asset. See here, I have motor vehicle, one quantity I purchased, straight line method I used 25%. My original value was 9 lakhs. My accumulated depreciation was 50. So my opening asset value is 850. Now according to the number of days and months, it will calculate the depreciation. Okay, like this you can calculate the depreciation for the old assets. Okay, now I will show you how to post the depreciation entries. To post depreciation entries, search for post depreciation entries. Click on post depreciation entries. Here you will get the depreciation posting date. You can select the month and date if you want to post by month end. Okay, then here if you want to post only for this month, you can select this. If you want to post for all the months, don't check this option. Now I am selecting only post for this month. Then I click on OK. When I click on OK, see here I am getting voucher posted successfully. Voucher posted successfully. Okay, now this voucher will get posted in non-standard JVs. Okay, I go to non-standard JVs. Now you see there are 2 vouchers posted here. I have 2 asset accounts in fixed assets master. Okay, I'll show you the fixed assets master here. Okay, I have 2 assets, so it has posted 2 depreciation entries. Now I go to the post depreciation entries, vouchers, non-standard JVs, journals. I'll just click on first depreciation entry and you see it has posted office equipment depreciation account debit and office equipment accumulated depreciation account credit. Now these 2 accounts will get reflected in, the first one will get reflected in P&L and the second one will get reflected in balance sheet. Okay, let me show you the P&L. When I click on P&L, okay, I'll just click on OK. I'll expand this report. Now you see I have office equipment depreciation account which is debited and my motor car depreciation account also debited. Now we will see the other side entries. I will go to balance sheet. Balance sheet report. I click on OK. Okay, end date I am selecting as September 30th. Okay, I'll just expand this report. Now you see here there are provisions, office equipment accumulated depreciation. So these particular account is grouped under provisions. Now you see this has posted credit side. Also you see motor car accumulated depreciation account. This is also posted under credit account. Okay, this is how the depreciation entries will be posted. Okay, now I will show you how to do the disposal of the asset. Okay, for disposal of the asset, click on fixed assets, transactions. Okay, under this you have disposal of asset component. Click on this, then you click on the new button. Okay, here you will get the date. Okay, whenever you do the disposal of the asset, make sure that the depreciation date, whenever the depreciation is done, the disposal should be after the depreciation date. So I have done my depreciation as of 30th September. So what I'll do is I'll give a date of disposal on October 1st. Okay, I will select my asset account for which I have to do the disposal. Then here you see, as soon as I select my asset account, it will show me the purchase price, accumulated depreciation as of 30th September. Okay, now it will show me for what value I have to sell this asset. Okay, now it is showing 736,575.46. what I'll do, I'll sell this asset for 800,000. okay, now after this I will select as disposal. Okay, I'll select as a type as disposal, and then I click on save. When I click on save, you see you get a message saved successfully. After this you can go and check your fixed asset report. I go to the depreciation schedule report again. I select the report level. Okay, I will select the date range as 1/4/2022 to end date, my sale of asset date. Then I select by location report and click on OK. Now you see here I got two assets here. The motor vehicle, you can see here. Here I got my disposal value. Now here at last you will get what is the disposal gain or loss. Okay, if it is loss, it will show as credit. If it is gain, it will show as debit. Okay, so now I have gained 63,424.54 in this asset. So accordingly, now I will pass a manual JV to clear the asset account, accumulated account. Then I'll even credit my sales account. Then I'll also credit my gain account. So like this you can do the sale of asset. Thank you for watching fixed assets video. In the upcoming session I will tell more about other components of fixed assets. Thank you.